Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and it's the 25th of September 2025. Welcome. I hope you've had a relaxing day wherever you are in the world. Let's get started on the markets as I see it. So let's start over here on the 4-hour. Let's start with the NASDAQ. So we've traded below this big BISI here, which is now an inversion. Trading back up inside it. I don't want to see us just roll over, and I don't want to see us trade back through this level here. So I'm going to put this guy right here. So that's like the line in the sand. You don't want to see it get above that on a close on the 4-hour. We've got a nice little reaction somewhere near the middle of this. I'm trying to pull the fib tool on the inside of this. We're at 75% right there. So if you hit right off the 75, I want to see it retrace now. So this would be like that graded response inside here. Your A plus would have been just a nice little institutional order flow entry drill like that and just keep coming. But it didn't. It's come back in, retested the 50% range, then went to the 70% or 75% of that small little SIBI there. And that was not really the range, just the 75% of the SIBI. And now we're getting a reaction off of that. So as we go down into the lower time frames and you start to look at these areas as sensitivity, we start to look for the potential for the setup for a change in direction. So we have the first down close candle. We've traded below it just with wicks. So now this one here is finally closed below it. So if we come back into that candle at 885 and then continue pushing lower, I'd be looking for the bottom of this SIBI here, which is 846. 846 to 841 on the downside. Now go down to your 15-minute chart, and we're looking at this area here, and you're looking for the next level of change in direction, which is right here. So there's your SIBI, there's your BISI. You got a run above the close, run above, came down, we tapped it, and it pushed all the way up to that 75% range. Hit it again, changed direction right here. We've come back into it, tapped it, looking for continuation. Box to box trading, we're looking for this level here to get hit. If you pull your fib tool on the, remove this here, this whole range here, %50 is anything below that level. So, or discount is anything below that level right there, that equilibrium. So right in here, we're hitting 62% of the retracement inside this range, and that is box to box trading, my friends. Box to box trading. Now you want to see if it continues down into this lower portion here, fills that, and starts to work its way through it. If it does, then we're looking for a deeper discount. Looking on the 5-minute chart, at that time when we had to change 75% of the SIBI, look for a reversal opportunity. You're looking at this here, and then this here, this overlap. Body trades down to it, freezes on it, comes back up one more time, then finally trades through that level. Look for this discount level to get hit. Discount level gets hit and traded through. If we come back and tap that, I'm looking for range extension. It had intentions of getting it straight down there, so it did, and we get a reversal. So body trades above it, inside this range, you're hitting 62%, and we're looking for an area of sensitivity as a reclaimed fair value gap, SIBI, and we want to see it continue going lower. You've got the conflict is this SIBI wants to go higher. Now it becomes an inversion, right? So you're inside that range there, and you're more than 62% of this little range from here to here. just above 62%. And then you roll over it. Now you say, I want to take this side out on the downside. It does. It comes back and retests that. I'm looking for a short. And there's your retest, and you go short. It's the same things every day, my friends, every day. And we're looking for 864 to fill today. Well, not today. It should fill in the next 5 minutes or so. $864. Now, how many times do you have to see it to believe that it'll work? Come here every day. We'll show it to you every day. Keeps on coming. I'd like to see us get below 790 on a close. And then start pushing for 694. So I'm just looking for 864 right now. And then we're going to wait and see if we close below that. And we're just running for the $791. Let's look at the 1 minute chart on that turn point. We have a volume imbalance here. You want to see a body break below that. The body's below it. You come back up inside it, right? You don't get up inside it. So if a body breaks below it, you look for a return into here, or use the wicks in the body of the lowest part of the swing. And you get the body. Another imbalance here. Run lower. This is the SIBI side. It trades through it. This level comes back into it. Continues going lower. You want to see a market structure shift. If you're waiting for that, you wait for here. Body trades below it. Now you want to trade back into this candle. Bodies respect it. Right on the money. It rolls over. And then continues dropping lower. So that's what you're looking for those higher time frame objectives. You're looking for that level of support. And then you're looking for on the lower levels to confirm that. You're looking for the lower levels to say, yes, I see that. It's confirmed here, then it confirms here, then it confirms here. And you go, great. Now I'm definitely on the right side of the market in terms of that was a 4-hour sensitive level that we're getting a reaction off of. If we get continuation, we should see this 864 trade through. And further downside. And you're always looking on the 1 minute chart to see if that 864 level now becomes an area sensitivity, and we see a reversal pattern happening there. So it's just a rinse and repeat over and over again. And if you're with me this morning, Gary, good morning. Thanks for popping in over last night with your lovely wife. It was nice to go out to a movie, hang out, have a laugh or two. It was nice. So I know he says he pops in every once in a while. He listens every once in a while. Okay, good morning, good morning. What else have we got here? Let's have a look at who's on the show this morning. Let me turn off my sound. There we go. Good morning, Hadi. Raz, good morning. Shepard, morning, buddy. Russell, Craig, good morning, folks. Good to see you guys. Let's look at Dow Jones. Dow Jones, this is a great little reversal. You see this? You come through it, you come back into it, start going lower. Some people might have waited for this candle to give you a institutional order flow entry drill, but that is the trade right there. Just right off that level. You would have a tiny bit of wick, but trade back into that. Nice. Keep going lower. Wait for this level to get broken. It does right here. Trade back into it right there. Keep coming lower. There's your next entry if you didn't want to wait for that one. Wait for the structure break again below the low. It does come back into it and then break lower. Now you want to see if it closes below this level. See how it's kind of hung up on there right now? Got a couple of wicks poke through it. Now we're getting a run back up here. So if you're bearish, you don't want to see this kind of stuff happening. Because if we get back up on top of that level, now look for another run back into this BISI above us. I'm not worried about the SIBI. It's this BISI. I want to see. Get attacked again. If we get above this level. You want to see this level here. Break. Keep coming lower. We have not broken this low yet. So a retest of this level right here, right there. That's what we just got. So I want to see that roll over now. Take out this wick, at least 50% or more of it, and then start closing below 67.16. So Kevin, that's the level you'll want to see it close below. Find some support at that and start pushing lower. Reach for this mean threshold of this candle and then drive for the lows. If you don't, if we start eating into this candle more than the mean threshold and we close above here, then I'm looking for a run back up into this premium area and probably a retest of this consolidation here. Tell you, it's magical when you see it. Got your first SIBI here. Body closes on it. Literally opens below. Is back into the consequent encroachment of that. Runs higher. Let's say you didn't take an entry there. You look for the first BISI to the, or not BISI, the first bullish order block to the left of it. And that's this guy right here. It trades through it. So you're looking for this candle to open and come back down. If it doesn't, look for, and it cleans out the next one, you're looking for a retest of this level. If this one doesn't get hit, like we just want to be a pop up above it, come back, find support at it, keep marching higher, and then take out that level. If this candle takes out this one and this one and this one, these are the ones you want to start looking for a retest. So then it opens, trades back in, entry here, right off there. Perfect entry. And where are you really reaching for? You're reaching for this, and you want to know whether or not this becomes a bull trap. So it trades through the mean threshold. And what do we say when it trades through the mean threshold? Chances are it's going to go higher. It runs up higher, wicks up, comes back down. You go, I'm going to wait. This could just roll over and start recapturing this lower part, right? So you want to wait for a body to get above here. There's your body above. And then as soon as the body gets above that, the area of sensitivity is the most sensitive in this candle is its mean threshold. And look at that. Bodies sit right on that mean threshold. And then we break higher. Premium arrays right here. You break through it and you come back, you tap it beautifully. And then you continue for range extension. So that is very, very, very nice market structure. Very nice market structure. So it's acting just the way you want it to act. So if you're inside this range, you got a box to box trading. We get a body trade below that, which you just did right here. You want to wait now. If this comes back in, retests this, I'm aiming for here. That's a 5-minute one. Here's your 1 minute. Trades below that level. You don't get a chance to get in on it. You get a chance to get in on this one here. Runs lower. There's the discount box. You just hit it right here. So there's box to box trading inside that small range there. Now you want to see if that climbs back up on top of here and then starts reaching back into that range, or whether or not this holds. And we're looking for, we've got no body. We have had this one here. So I want to see this hold. So we'll watch the bodies here. This trades back through this level. Look for the body to get up on top of here to reach for this premium box. If this holds and we get a body that closes below here again, then we're looking for another run on this low liquidity here, down here, which is that hourly or 5-minute one. This is the run up. Last night I was having a discussion with, I think it was Russell, that we're looking for this area for sensitivity, and then we're looking for 50% of this range. It ran into that 50% area, so I was looking for this and this next. And then you see this change in direction, body trades below it, then we trade right back up into it and continue going lower. So this is the go, no go zone, right? So you trade all the way back into it, and then you trade below it. We're gunning for the lows now. Doesn't even give you an opportunity to get back in on that to go lower. It just runs straight through the discount, takes out the low downside, and then you wait for another reversal. This is an immediate rebalance, so I'd be looking for here. That didn't work. All one candle. Trade it right back up, and you wait here, and you go, are we going to get above that on a close? Sure enough, we do. We come back down, and we just tap this SIBI here. You don't get a retap of that one. SIBI's hit. You run for the highs. Look for this reversal. Wait for a body to trade below that. It trades right there, and you go, great. Now I'm looking for a deeper run back inside this whole range here. And I'm looking at this area of sensitivity. Remember the candle we talked about before? The last up close candle on the break. We want to see its mean threshold. Look at this. Right there. Mean threshold hits it. It's an area of sensitivity. Come back up. Now we start to use these blocks as support. Support. Big block here, support. Then you're looking for this area of sensitivity again. Look at this. Look at this last up close candle. We broke it right there. Come back, look at the mean threshold. Holds it. Runs higher. Morning, Abs. Russell, good morning. This is that gold from yesterday. Trades back into it, takes out the low. Get another change in direction. It ran all the way back up inside to the mean threshold of that candle. Finally took out all the lows and hit the discount box. So box to box. You've really got nothing inside here except this little guy right here. And you kept trading through that till you got a body through here. Come back to mean threshold again. Went higher inside that range to premium box. You hit the premium box right on the money. Then you wait for a change in direction. So you wait for market structure shift. It does right here. Body trades below. You come back into the wick. continue down into this range, and you're looking at this level here. You trade through it, you come back into it, you hit this order block here, get some support off of that. Now you're looking for a body to break above here. It does, and then we watch the mean threshold. If it trades through the mean threshold, I'm looking for this to come lower. Inside this range, I don't see an immediate rebalance so much inside here. You have to go down to a 5-minute chart or something to see what that aimed for. Let's go into a 5-minute chart and see what that was aiming for. Right here. So immediate rebalance, small little volume imbalance right here. Last up close candle. Wicks come all the way down, body's respecting it. You're inside this range here, so you're probably looking at more than 50%. 62% right on the money. Back up into this mean threshold of this up close candle. And it's giving us a level of support. So if we can get back up on top of that, look for a run higher into the range. A little choppy here right now. That's gold. Those little pigs are out of the barn and running. Out of the barn and running. I wonder how much that would have been worth to you had you taken that trade that we called back in August. I wonder what a $10, $11 run with one contract would have been worth. Anyway, I'm not going through all those anymore. This was the box-to-box trading that was going on yesterday. Finally broke through the box, took out the low. So you didn't even get an opportunity to catch this to go lower. It just ran straight lower. So then you look for the lowest down close candle and look for a retest of that candle and then a continuation. So that's what you get. Lows taken, range is extended again. We get a change in direction. We're looking for a body that breaks this level. Body breaks that level. If we can retest it, looking for higher prices. You're inside this range here, looking for this breaker right here. You trade right back up into the breaker and this fair value gap gets filled. Then you're looking at see if this breaker acts as a bull trap and traps people thinking they want to go long on that still, and then it quickly reverses on you. So if you're not paying yourself inside that range, 62, 70%, whatever, or off the order block or off the fair value gap, SIBI, repay, then you got yourself beat. And you see how this no bodies are breaking this level. You get the wick did some damage. It ran right up into the rejection block, then quickly turned around, drove through this discount array here, and then cleaned out the low. So now you're looking for this level to get broken to the upside. It does. Now you want to see it come back and trade back into this level or inside this one. Now that this taking this low, you're looking for this level to get traded back into. If I take this to here, that's the bottom of this SIBI. So you can go one level, 2 levels, 3 levels. Stop loss will be sitting below the mean threshold of this because you have to account for this down here as well. And you get a nice little pop in there. You're still inside this one. And then the continuation. Body trades above it. We come back, find support at it, and now we've gone higher. That's the DAX. And you're looking for up here. target. Now you're getting that reaction. We just traded back inside that level, and now we're getting the pullback. And it's at 837 is their pre-market open. So you want to see if that's half this wick, and then roll over and come back down some more. Oh, my beloved AGNC. One day we shall part, my friend. Looking for AGNC to get on top of that. These are all paying huge dividends. The banks are on fire. Montreal's good. Scotia's good. Keep an eye on this level right here now that we've traded below it and back into it. If this rolls over here now and takes out 88.20 and we get a market structure shift, then we could be coming back into a deeper run into this range. And if you take this swing low, is there a swing low? There's not even a swing low there. You'd have to take it right down to the low and pull the fib tool on that and look for 50%. So you're looking for potential $8, $9 reversal if we get below this low. And if that's fine for you, then that's fine for you. That's a 10% drop in money. And don't forget, seasonal tendencies are typical. The high is, another high is set in September. And then they run down into October, November, creating a low. And then the one more drive higher into the rest of the year. So you're always kind of looking at these levels, this little swing level right here, and these imbalances. No different than if this was a 1 minute chart. It is no different whatsoever. I don't care what anyone tells you. It does not change. Euro dollar. Still looking for this upside. We're in a bit of a stall here. Well, this is weekly. Let me get into the daily. So you don't want to see this trade below here. So the fact that we came down, hit it right here, so this mean threshold right there, right where it's at right now. See how that just came down and then started going higher. This whole candle coming down, not what you want to see, because see how that changed in direction? We traded below it. We've traded back up inside it. So now I've got two conflicting points of view. One says I want to go start going lower, and another one says this candle right here has to hold price to go higher. So it did, and now it has to do it again. Not a good candle for a daily today. Not a good candle. We closed out. See, in a way, we're looking at this level here, right? So now that we traded through this level, you want to see that level give way, and it did. It gave way yesterday. Then all of a sudden it traded back through it this morning, and now it's ripping all the way through into this level again. So the fact that it actually traded below 117.91, you go down into the 1 hour chart or the 15-minute chart, if that's your no-go zone right there. So we're going to do the little experiment here just because I want you to see how a fail-safe would have saved you right here. That's the level I'm looking for, okay? So right here, you say, I want to see price hold here. If that closes below that level on a lower time frame chart, I'm on the wrong side of this. You may put your stop loss just below the mean threshold of that candle and say, I do not want to see us break below here. I want to see that leave. So if you want to demand from price action that level, and you've already come back in here and you've fully filled it here. So we're looking right at that level at 117.93, 94 on the lower time frames, and we're looking for to see where it gets violated and where's the change in direction. Here's the change in direction right here. We traded back inside it, came lower. Now, where is this relative to that mean threshold? That's what you have to ask yourself. So when you go back to this daily chart again, and you ask yourself, where am I relative to this right here? Okay, so if you see right there, there's the change in direction on the daily chart. And then we see, great, it came all the way back down, went through this mean threshold. This mean threshold, this candle holds price, this fills in. We trade back through it, take this high out, come back, find support at it, and now you want to see this go higher. And there's the reverse. So we're looking right here. That level's now been taken. So now we're digging down from oh, that was the daily. So now we're looking for that 4 hour. This is the level we're looking for right here. So we don't want to see this level get broken. It gets broken on the downside. And you go, I'm on the wrong side of that if we break through here. What have I got to reach for down here? I got nothing in here except maybe this immediate rebalance right here. That's the bottom of it. So if your stop loss was sitting here and you're still coming lower, let's go down to a lower time frame. That's 4 hour. When you have a little market structure shift, you break below it and you come back, you tap it right here, and then you keep coming lower. So you don't want to see that market structure shift on a 4 hour. Right here. Now look for this is the level we're looking for. We don't want to see it get broken on the downside. We've come back multiple times here on the hourly and we've hit it. We get up into this rejection block and it starts to fail again and you go, I don't want to see it come all the way back down in here again. So all this is suspect, right? You've been hitting this, you've been smashing off that level multiple times and you're looking for it to finally breaks out, starts to go higher, you go, great. Now I want to see this mean threshold. I want to see this candle get broken above this. Otherwise, this is going to act like a bull trap. And it does. Acts like a bull trap. When you get this snappy candle down, you go, that's not what I want to see. And I've now closed below the mean threshold of this candle. And then you're said, okay, I'm stuck in this range again. And if I trade below that level on a close, I'm on the wrong side of it again. So there you go. You close below it. The next time you come back, you get an opportunity to unload your position right there. And then it quickly goes lower. So right there, you have an opportunity on an hourly chart to break even. Let's look at a 15-minute chart. So 15-minute chart, it's waffling up here and you go, I don't want to see this level get broken to the downside. It does. You wait for a market structure shift. It breaks below it, comes back into it. And we continue going lower. So if you look up here, you go, if you'd gone long there, you go, that's breaking structure. I don't want to see that. I'm out right there. So you're out before we take that low. And you see it, because that's the whole suspect rally back down again, right? And then it waffles. And you go, I'm going to use that as my line in the sand. It trades through it. You go, no, I'm on the wrong side. 15-minute gives you an opportunity to get out right here. 5-minute. You've entered in here and you go, I want to see this keep pushing higher. But then it rolls over and you go, I don't want to see that SIBI get taken to the downside right here. It does on a close. You go, I have a market structure shift on a 5-minute. It comes back in. And now we've got the continuation all the way back down to where you'd entered. So you go, I'm out of that trade now because it's showing me that it's changing direction. If you want to wait for the next one, wait for the next one. Breaks below it, come back into it, and then we keep pushing lower. That's how you've used that higher time frame to validate what you want to see and what you have to demand of price action. That makes sense? Anyway. That's how I see it anyway. For what it's worth. Morning, Hans. So consequent encroachment. That's what we're banging off of right now. Looking for 856, 855. Looking for the consequent encroachment of the midnight open range. I was waiting for this a while ago. I wanted to see it come back into here. And during my little chat here, it's returned all the way back into this level. Change direction. Order blocks traded below, we trade back into it, keep coming lower. Want to see this get taken to the downside now. Use this order block here to push lower. And you're aiming for the open and the mean, or the, I'd say somewhere in the middle of this midnight open range. Now you've traded through this level on a close. Before you go back here, now we're trading right back up into that. I want to see that go lower from there. We'll just take it right to, oops, the wrong damn thing and with the stop loss. Anyway, looking for the sell side here. If I close below, above that, stop loss would go above here because I don't want to see a skid above that. So I just want to see that come back down here and take out that low now. Two overlapping ones. I didn't see this one here. That guy there. We got squeezed. Still looking for these lows. Nope, that would have got me. Trade it back through that level. Trade it back through this level. Ran out any stop loss you would have had. Welcome to chop. Now if it goes all the way back down there, that's the damage that wicks can do. We'll see where the body ends here. Let's see if it ends inside this level. And the one that we're looking for is right here. We'll see where that one closes. I'll include that level there as well. So we've closed above this level. You just found support at that level. Now we're looking for this to push higher. Let's see if I can get through this level. Still want to see it come down, take out those lows. The bodies are now above that level, so now I have to be bullish inside this range here now. Targeting 884. If we get above here, that is. $864 to $866. Rejection block. Rejection block. All in one candle. There's that level, the 85. Literally opened on that level. Premium hit. That's correct, D. You do. Got to get below here if you want to push lower. Otherwise, your next upside is right there. See if this holds price. Get on top of that and this. Run for these equal highs. And then if we have an upside, I'm looking for 24,979 again on the upside. Here's the box. 15-minute. Right on the money. So this is your 1-minute box. 5-minute box is here. You have to include that imbalance. And you have to include this imbalance as well. So there's your box, the box again. Inside that range. Premium discount. Hit it, hit it. Perfect in one freaking candle, 1-minute candle. Rip right up to the perfect spot, down to the perfect spot. I want to see if we get through that on the downside. Just wait for your opportunity now. Wait for this market structure to shift here. Once you close below here, and you got 13 more minutes yet. So wait for this open range to show itself. Don't chase it. Just wait. Body breaks below, comes back inside, runs lower. So I want to see this keep coming lower now. Lovely, lovely. As soon as you hit rejection block right there at 847, pay yourself. As well. We've got our, now I'm looking for an area sensitivity here. If not, I'm looking for 791. Right here. We'll see if that holds. And we start to see a change. So you're looking for a 1-minute change here. If it doesn't, just rocks, keeps coming lower. Next objective. And then I want to see how that 15-minute chart acts right below here. If you look at your higher time frame 4-hour chart, this could be the next big leg all the way down. This could be the big run into October. But who knows? We're not really counting the highs yet, but we do have a change in direction right now on a higher time frame. So in the next 9 minutes, you got a little change in direction here. If we get a body close above that, and I'm just looking for the next 15-minute candle to come back and retest this level. And depending on where it closes, because we've already swept the low, We're looking for that area sensitivity right here. Looking for it on the lower time frames, kind of like what I went through this morning explaining on the euro dollar. We're doing the same thing now. We're looking for that opportunity to see this change in direction. Come back, find support at that in the 1 minute chart right there. See how we've just traded above it. So I'm looking for a retest here. The stop loss will go down below the low. If it closes below that, you realize you're on the wrong side of it again. This is coming deeper. So we'll watch to see where that closes. Three, two, one. It closed below it. Well, just came back and tapped. See how you talk about that being the perfect place to enter for long? And if you're wrong and it trades below, it comes back, gives you a little opportunity. That's the fail safe because it's going to come lower. And there's your rejection block. You got 7 more minutes for this one. There's the lows taken. Look for a retest of this consequent encroachment again. Well done, Derek. Good job, buddy. Yeah, mobile phone's a tough way to trade, man. You don't have a laptop over there with you? Now I want to see this level provide some support all the way up to here, which would be that level right there. There's the retest, and we have a little fair value gap forming here, so you got to wait now. Wait for this to break structure here and then run back into that range. $8.26, did that reach that? Yes, it did. $8.24, that's that little bissy there filled. Even that wick shot through here. Watch where that closes in the next second or two. So this is run all the way up into this here. You want to see that roll over and keep coming lower now. See, the fact that we're just sending this candle back up here again, not a good sign. Now we're through that level and through this level. So bullish inside this range here. Wait for us to get back above this close candle. See, now watch the sensitivity. Does it hit it nice and clean and leave? Does it hit this nice and clean and leave? It starts to wick through it. Let's just chop now. Not interested in chop. Mean threshold. Not interested. You don't want to see it trade below here. Use this level as support. Eat through this mean threshold and start running for the lows. Maybe looking over here. Banging off this order block here. We've hit it multiple times. And now I want to know if it's certainly holding price back. Retrace back into this range here. Bouncing off 50%. That's all it needs to run down into here. Usually you'll see it like just pop up above that with a wick and then run lower. I've got that sitting right on the right one, right? Yep. So watch that level right there. See if that holds, turns into a wick again. Oil. See if you can get through here. Bitcoin still going higher. Finding support off this level. Looking for these equal highs. then 113,380. Your stop loss will be going just below here. Mean threshold of that candle is what you want to see. Whole price. This premium box here, you want to see that no-go zone. That's really got a nice hold price. But if you get a drag down below it, watch this here. And then that mean threshold lines up with the open or close of this candle. You want to see a wick in there and leave. That's weakness for me. Strength is if we stay all above here like that. Keep pushing higher, looking for these highs and that mean threshold level, which is 113,369, 375, somewhere around there. And if you take that, then we're looking for a nice little run back inside these civvies here. So the breaker, the parent breaker that takes all this out, these two candles. Bodies are respecting the consequent encroachment of those two candles. If you just did the bodies themselves, they hit the mean threshold, reversed, market structure shift, body breaks below it. That is what this is. Come back, respect it. If you take the same thing we just did right here on the body, that there is the same as that there. Run lower, take out the lows. Traded below that level again, back inside it. This is what I wanted to see for the short earlier. All this crap here, not what you want to see. This is what you wanted to see. I wanted to see this come back into there. All that was not clean price action. Tap and go lower, take the low. That's exactly all that there. That's where my short was. And that was sloppy. Took me out because I want clean action, and this would have been a little cleaner had these last 4 or 5 minutes not been there. And then you're aiming for this 791 I mentioned earlier. So right direction, a few shitty candles, but it happens. That 791 level and the 6 a.m. candles in target down here. So abs, that's where you're aiming for. Is 790.25. and then the 6 a.m. candle. There's the 790. I'm just waiting for the 6 a.m. to get hit now. There's your low. Yeah, your help through the consolidation. Help row helped me get through that back and forth stuff. Row, who's row? There's the 6 a.m. tap. Now what I want to see is see if we continue to go through here, because you're looking for a change in direction or a continuation. If you're still in this, take profit model 3. If you're doing this, pay yourself here. Oh, excuse me. Who's row? Your help through the consolidation row. Whoever helped Derek through that, good for you. Welcome. Thank you for helping him out. What's your upside objective? 818. So did you pay yourself right here? I gave you that perfect little spot there, right there at 90,925, and the 6 a.m. There's the retest. Now you want to see that, tap it, roll over and come lower. You do not want to see it start eating through this, because then you're looking for 62%, which lines up with this breaker. I'm all right with that. But if we start eating through this candle on the upside, then you would have been glad you paid yourself here, and your chem or your take profit model 3 gets broken. Find support at it. You're closed. You're finally out of your trade here. So that's your stop loss in case it rips through you. But your take profit model 3 would be a close above here. Then that's your first SIBI broken on a close to the upside. Otherwise, right there is what we're expecting as a retracement. So your stop loss has to sit above here, and then we're looking for continuation on the downside. Bro, you're talking me through. Oh, okay. I'm sorry. My brain's really not here this morning. Well, I'm glad I helped you through it then. I thought, well, I'm like, who's Ro? I thought maybe he means Rez. Has Rez been talking? I haven't seen Rez talking, so I don't know who Ro is. I'm tired. I didn't get to bed till almost 1 last night. Gary was over yesterday with his lovely wife. And you know what Gary's like? Gary's a party animal. Yeah, we went out to see Downton Abbey, the final movie. It's definitely a A good series, that's for sure. It's good little drama series. Well acted. Very, very well acted. So you see how we've come up into this level here? And then you retrace off of it. These two candles, not what you want to see. Not what you want to see. You just want to see it come back up. Tap that. For clean price action, you want to see it tap that. And this one here, start driving down. Get through this mean threshold. So now this candle now becomes sensitive. The moment you close above it, right? You come back down 1, 2, 3 levels of sensitivity. And now we're getting a reaction off this open. And now you're looking for this. It's run back up into just above the premium level again now. See that? Just above that 50%. Now you got to start really booking it down here. Again, we've given it the latitude to move to 62%, but I want to see this really accelerate through here. Now you just popped up above that premium level. And you start to lose its love for me if I start to eat through that on a close. I'm here, got a share of the short. It wasn't courageous to keep. That's all right. That's not the word you want to say to yourself, man. Talk to yourself in a positive way, Rez. Just say, look, man, I caught myself a little piece of that action going down, and that's what you got to be happy with. Don't say it's a courage-based thing. It's not courage. It's just a matter of when you watch it enough. You'll see, you see me still taking levels that I expect to see a short on, and it turned back against me and took me out. And I go, oh, well, it's chopping around here. I'm not going to keep taking it and taking it and taking it. So I'd have to wait for a market structure shift and then trade back into that to get short again. And you still didn't get that opportunity. Oh, maybe I guess I could have taken that there. Didn't. Looking for it to break down in here, retest that and go lower. And it did right there with precision, but I didn't take it. So don't beat yourself up, Rez. It's all about mental attitude, man. If you find any little way to niggle into doubt or fear or reinforce a negative belief that you can't do something, or you don't have the courage to do something, or don't have the guts to do something, or you chickened out, these are all phrases that your unconscious picks up on and looks for reasons to keep your courage down low, keep your chickens up high, right? Just positive, man. I nailed a piece of that. Next time I'm going to nail a bigger piece. I'm going to see that. I'm going to trust this level right here. And you go back in and you dig into your charts and you find out where that data point is that made your, as you call it, your courage diminish. What was it? The money that you're looking at over here in your chart and saying, oh, I'm up $300. That's more than I'm making a day. I'm out. Well, then that's not trading. That's just you staring at a chart and relating it to your reality of it's all about money and not about trading. Does that make sense? Yeah, it's good. It was a good movie. I liked it. Mind you, I'm a big fan of acting. I took that acting at university. So my acting teacher said to me, from this day on, you gotta be careful, you guys. From this day on, you're never going to look at another acting show, anything, again, the same way. You'll never enjoy a show the same way because you'll always be looking at what you're going to learn in school. And we go, it's true though. You look at it and you go, that's awesome acting. I love that. I love the fill they're doing in between those two characters that one's talking, the other one's not. And the one who's not is filling in the space for the other actor. Amazing. And you see some real masters do some incredible job of that. So anyway, we're above that level now. Just slightly closed above it. So if you were short, you'd be out of that, just waiting now for a cleaner setup. See how we've come back in this multiple times? You don't want to see that. And it's hit that key level we're looking for here. And now you go to change here. And now we're looking for, do we get a break above this range, small little range here, and start getting back into a run higher. Or do we just wait and for this mean threshold to give way and then use this level once again? We've traded below it. See how you've gone above it, below it? You got to wait now. You got to wait. Unless you're still in it from way up here and your stop loss is up here. I don't know, whatever way you're managing it. Whatever way works for you. There's the 62% we're looking for. You want to see that just shoot back down from here now. Yes, I do draw the 6 a.m. candle manually. Abs gave you a great candle months and months and months ago. He's been studying it for years. It's a well-trusted level. Put it on your charts. Put it on your charts. It's a great little level. And it's just the 6 a.m. first minute of the 6 a.m. candle. It's not the whole 6 a.m. candle. Not like the 3 o'clock candle. That's why we do a Mark 3, and it's right into a Mark 3 level, which is the consequent encroachment or mean threshold, depending how you want to word that. You're looking for the midpoint of that 3 a.m. candle, and it happens to line up with our 6 a.m. candle. Now we're below that level. We're inside that level. Keep coming down. So that's 62% we allowed it to get back to. Down you go. If you're using your take profit model 3, the moment that closed above that, you're out. Yeah, I got a small chunk of the down off the first fair. Good for you, Russell. Good for you, buddy. Rez, there was a volume imbalance below AH. I left right before. Okay. So next time, Rez, look at it and say, that volume imbalance, I want to see it hit that volume imbalance, and I'll see how it closes on there. As this candle's acting, it's the psych candle. I call it a psych candle because it'll really psych you out with these wicks and stuff. But you got to wait for it to close. Unless the wick is really pushing hard through your level and takes you out, then you're done. Right? Did they just leave? They left already. It's like, what are you doing? See how you take profit model 3 got you out of the trade, and now all of a sudden it's right back up and going into this premium. So we're looking for that level right there on the Mark 3, 6 o'clock. You got some good levels of precision there. So look at this here. You say, is this just going to be an institutional order flow entry drill for continuation on the downside? So watch this, and then you're looking for on the lower time frames to see if that confirms as a reversal. So we want to see this cluster of candles here, this little breaker. You want to see that hold price. So the last up close candle, you want to see its mean threshold, hold price, roll over and come back down again. Or if we're going to come back in and fill this, you want to see this break to the upside, use it as support, and start running higher to fill that fair value gap or consequent encroachment in effect. Right? So right here, you just saw that institutional order flow entry on the higher time frame. So go down to the lower time frames and say, here's my 5 o'clock or 5 minute ones. Yeah, see how that 5 minute is showing you that it's a change in direction. So now you want to see this give way right here, not just tap it and go higher. So you're watching here because one wants to go higher. This one's showing you it's an institutional order flow entry drill. This one says it's just coming back for me to go higher. This one's saying I've got a bull trap that's holding price back and I want to see this level give way on the downside to support going lower. So you want to see, I want to go lower. I want to go lower. This wants to go higher. So you say, I want to see that break to the downside and then still hold this. So in order for that to happen, this needs to give way, hold on to that, and then start going lower. Then you'll get break, institutional order flow entry drill, and a continuation. Does all that make sense, you guys? So you look for this key point in your higher time frame, that level right there. Now I look on my lower time frame or a 15-second chart or a 1-minute chart and look for that opportunity right now to see my setup form in there. And that setup forms in there, I can take it and I got to look very carefully at the range that I'm in, and I'm saying 50% of this whole range, and I'm waiting for this to break to the downside. It does right here. Now I'm looking for that to go lower. Time chart off in England. Say hi to Nikki for us. Great time. Enjoy the company. You got the keys turn up? Okay. See ya. All right, Charlie's off to Vancouver. Oh, look at that, really holding on it. You're back above it. You're through here. See how that one there? You're through it. You're back to it right here. So this one here is holding price. This one here wants to go lower, and it's holding there. So now the battle is between this guy and that guy. Keeping in mind our institutional order flow entry drill and our 5-minute wants to take it higher. This one wants to go lower. This one wants to go higher. This one is battling back and forth, saying, I don't know which way direction I want to go just yet. So it's like a video game, man. You can enjoy it like a game. Who's going to win the battle? Rest in peace. Yeah, Robin Williams, amazing guy. Such a sad loss. Same as James Seymour Hoffman, man. The guy's an incredible actor. But that mental health issues, you know, mental health's an important thing, man. Don't ever. I used to be a real anti-psychiatrist kind of guy. And then you find a psychologist that really knows what they're doing and really cares, and you see genuinely they care, and you're not just constantly looking at their watch. Your hour's done, thanks for the money, and off you go. We'll talk about this later. No, man, you see somebody really cares. It's really neat. Close below in it. There's the first little indication. I'm through this one and I'm through this one. So you want to see, just keep coming lower and watch how it's acting, right? This is breaking downside. You came back in, you gave it a little kiss, keep coming lower now. So now in sync, in sync, in sync. We want to see it keep coming lower now. And you'll see it's when it's hanging around in here, it's choppy. True clean price action just hits and goes, man. Now you have to decide for yourself whether or not you believe this, you buy into this, and that there's an algorithm, or this is a boardroom meeting we're waiting to end so they can decide where markets are going to go. looking for 15-minute 8 p.m. fair value gap, hourly fair value gap. $8 p.m. hourly fair value gap to hold. Mm-hmm. 2300. I see 11 p.m. Look at the 11 p.m. candle on 1 hour HIDSIGHT. Look at its high. It's right here. That 11 p.m. candle, draw that out, 11 till 1. Draw that out on your hourly chart, and you'll see that's what it's come back and retested. It's also come inside that volume imbalance there at 1600 yesterday to 1800 today. Choppy as hell, but I still want it to come lower. Everything's in alignment now to come lower. Yeah, just sit on your hands and wait. This is just choppy. What else we got going on over here? That's the 1 hour box. We've come back and retested this again in the last hour, pulled back. Order blocks holding price, nicely. Breakthrough here, come back, find some support at that. Mean threshold, imbalance. I don't want to see it close back through that. I want to see that hold price and start coming lower now. Mean threshold, we talked about the mean threshold of that candle. It's come all the way back into that. I want to see this attack this. These candles are fighting each other now. That one and that one. Who is going to give up? So this was a quick, powerful drive forward. Back into here. Watching those two fight there now. Crude oil. Traded back. Took out these lows. Traded back into it. Ran the lows again. Or to the lows. Wait for body to go above. It does. Runs out, takes out the highs. Change in direction. Here. Now you're between here and here. No, it will be here and here. Range. I want to see this whole box here. Draw it out. The SIBI side and the busy side. In order for this to keep going higher, SIBI, BISI, roll over, wait for this to get taken out and then start coming lower, or wait for this to close above here, aim for the mean threshold, take out the high, use that candle as support, its mean threshold to give you support, and then keep pushing higher. We said the line in the sand was the mean threshold of that candle. It's still holding off the high. It came all the way back in there, hey? Hit it, went higher. We didn't want to see it get below that, but it did. Came back to that candle's close, and then quickly shot back up again. That's why you got to be one tick below the low. You don't want to see that mean threshold get given away. So far so good. Still looking for more upside in Bitcoin. Gold is really choppy as well. Not doing those anymore. DAX hit our upside objective here. Nice, came back, found support at this, pushing through. Want to see us get back up on top of here now and start pushing higher. Then this candle becomes important. So far, this is way cleaner price action. Look at that. It's way cleaner price action than that chop. I can see why you guys like trading the DAX sometimes. It's a lot way cleaner, man. Way cleaner. Target. That's it, baby. Keep running. The dividend funds. Dividend funds. Look at that baby go. That means AGNC. Yeah, it's a little pop up there into the rejection block. I bought lots of AGNC here back in 2021 when it was 16 bucks. And then I've been scaling more and more in all the way down. So this is all good. I think my break even was over here after all the dividends and stuff it's paid. My break even was $8 or $9 or something like that. So it's all gravy from here. No more risk. Unless it starts dropping below here again, then I'm underwater again. So every month is dividend time. Dividend payment. And then looking for a run above here. I don't want to see it. It's got to get back above this level. Maybe 12, 13 bucks. Take out this candle on the upside. And now we've got some support as I run higher to run into this level and that level. I'm getting the hell out of that. These are all awesome trades right off of April. Oh, I tell you, it's delicious. April entry. Beautiful. April entry. April, May entry. April. I don't have my entry in here because I bought it way over here. I think I bought it like $10 or something like that. So this is all paid dividends. I'm at break even now. So this is nice. Finally traded through here. Come back inside it. Changing direction. Wait for a market structure shift above the old high. Trades above it. Trades above it right there. Comes back inside it. Runs higher. Takes this candle out. I want to see that close above here now. And use this candle as support to keep pushing higher. Looking for my little box up here. And the banks still doing good. This is still holding on there. Gary Laurentian still holding on. This is Bank of Scotia here. One day. Euro has pooped the bed after yesterday. Market structure shift. Find some support off of that right there. Continuation on the downside. Wait for this little structure shift. It does. Right off of that. Keep coming lower. Market structure shift. Breaks through it. Comes back. Find support at it. Keep going lower. Wait for market structure shift here. Draw it out. Wait for body to get below that right there. Trades back into old lows, next lows, and goes lower. Like there's some amazing points to, as soon as you get market structure shift and a retest, you can catch the opposite side of the charts as well. It's a no trade day for Craig. Yeah, this is just choppy as hell here now. You gotta wait for a structure shift above or below here now. Now that you've messed around in here so much off of this one level, and there's no premium level above you except for, you know, right here, but that's a SIBI. I prefer BISIs on that side, so that's just, I'd expect to see that provide support. Once you trade through it, find support at it, keep coming lower. Found support, found support. So this is holding, and so is that midnight open range first presentation fair value gap. That's holding as well. That's what that little guy is right there. That's holding price. And you're back through here. And again, it's so choppy, you don't want to keep trying to re-enter in here, otherwise you keep getting beat up. So wait for a structure shift. So invariably we're looking for what we were looking for here in Euro. You're looking for this kind of thing. So if you're waffling around in here, you want to see market structure shift with a nice body, come back, tap it, and keep going lower. You're going to see a body trade through it, come back, tap it. So that's what we're looking for right here. Waiting for this body to trade through it, come back, tap it, and go lower. See how this 5 minute says we're going higher, going lower, going higher, going lower. Welcome to getting beat up in the market. We still have institutional order flow entry drill, but we're getting this like pendant thing happening here, right? Where it's going to compress till we get into lunch hour, and then wait for after lunch and burst out of there, or just for another acceleration back up into this low and then go lower. So I'll be looking for something like this. If we run back up, hitting into that, if we go through that, then you're looking for a retest of the 15-minute fair value gap again. And that would be a full fill. I'd expect to see a full fill of this. Stand by. Let me give you a different point of view there. No. So 75% fill of this SIBI will put you right back on that 15-minute one. So that's your D level trade, but it's like a graded response. That's an A level entry for continuation. B level to 50%. C level, sorry, and then D level is a full fill. And if you get through that, then we're obviously going higher. It's a fail. That's my graded response. So now do you have the patience to wait it out, or just go to another market and look for something cleaner? Chop. Support down below here. See how body trade's below it? You come back in, find support at it. Keep pushing lower, looking for the rejection block, old low, mean threshold, relative equal lows. You're gunning for those. It's good support. Keep coming. Keep coming. Well, this may be another wait till this afternoon. If this doesn't start doing something soon, look for the macro here now. We're just going to wait another 20 minutes for a macro. Oh, there's a bit of a delay there, eh? Let me move that across there. I've got nothing here. Retest there. And then stay on the horse here, you guys. Practice, practice, practice. How many of you walked away from the charts already? How many of you said, oh, this is not worth playing in? And how many of you are actually marking out your lines, watching how price bounces around inside here and say, can you still make sense of this? Because if you're coming into a chart fresh and you're looking at these levels and you're going, okay, so higher time frame, what have I got? I've got an institutional order flow entry drill. Do I have a higher time frame downside objective? I do. Is the lower time frame still supporting a continuation on the downside? We've got a mess right here. So then you look at this and you say, how do I get back in sync with this and see where we are in terms of, are we still starting to push, drag this lower, or are we starting to change this narrative here? And we're going to do another run on that, those highs there. And how you can quickly come back in and suss out where you are exactly in the market in terms of where it wants to go. And then you can decide, okay, I'm slightly bullish, I'm slightly bearish on this idea, or I have no idea where it's going right now, so I'm going to wait. Where would I wait for? What market structure would confirm for me that this market is going to go lower after a higher time frame objective? What would be an objective I want to see get taken out on the downside for me to embrace this as a another continuation lower. And what level would need to be broken on the upside for me to warrant that we're attacking this SIBI one more time? That right there. This right here. So you wait, you say, okay, that's so the only one, I've only got one level inside this whole range here. I've only got one level that finds support. That's not a support level for me unless I'm looking at it for a short. So I want to see that bull trap get taken to the upside. So that's how I kind of build my narrative around that and say that has to get broken or this has to get broken. If that gets broken, I'm looking for an attack on the rest of that SIBI here. Exactly. So if that's what you see, Craig, then you've got your answer. Move to the sidelines and wait. Because if you're trying to catch a breakout out of here, and you just use that one level, you catch a breakout, you're on the wrong side of it. It took you out. Then you want to go short, then it suddenly takes you out. Then you want to go long, it comes back and it takes you out. And it takes you out again. So you're out, in, out, in. How many times do you want to keep taking it? And if you say to yourself, now it's going to go lower. I should have taken it. That's just ridiculous. It's just getting beat up way too many times. So just wait for a structure shift for it to confirm the direction it wants to go. Because this is designed for those impulsive people that want to keep chasing that one setup over and over and over again. Take it once. If it fails, wait for a market structure shift. Four hours going lower, 1 hour's going lower, 15 minutes going lower, 5 minutes. Yeah, now it's showing you it's going lower. Now we've got lower on the 1 minute. So wait for a structure break. You can look at this as a structure break, a retest. So as soon as you get a body below here, which you just did, now give a retest here. Right there. Now look for this to roll over here. You don't want to see it go. Nice clean would be just to start to pull away from here now and go lower. That would be clean price action or cleaner. On the 4-hour chart, you've got lots of little lows resting below you on a 4-hour chart. They're sitting down in here. Equal lows are being tagged again. You're back into chop. This is a breaker that takes out this high, but doesn't take out that one. So this breaker is now being retested. So you wait for market shift. Now it's trading back against everybody and it's just getting pissed in here now, right? That's what you wanted to see and then pull away. And then all of a sudden it starts to eat through it again. Back into this last up close candle. Back into this level again. And if you get back up on top of it, you think, oh my God, I can't get this thing right. Wait for the market shift. What's oil doing? Finally, it came down through our level. Found support. Finally ripped through all our level here that we were looking for it to come back into. Tore through it. Now you've got lows that have been swept. And you see this. One minute inversion. Inside that range. I'm looking for a retest of that level. Retest that level. Now you want to see it roll through here. Take this out. Come back and support at that. And then run for a new low. On a 5-minute crude, you've broken through the breaker. You've trade back into it. Now you want to see this mean threshold give way and then start digging into this regular trading hour gap again, aiming for your next downside objective, which is right here. So that's 6409, 6407, and 6405. I'll put this down here now. 7 and 9. 9's already been hit. Right on the money. So we've traded above it. We've traded back into it. Looking for a run higher here into this level. You wanted to see this trade through here if you want to come lower. Right now you're still bullish inside this range. You're still bullish. Now you're looking for an error sensitivity. Now go down to the 15-second chart and look for a reversal here. $64, $38, $39. So this first presentation for value gap. If you get through that, then forget the idea of going lower for now. It ran down to the discount box already, tapped it. It wants to go through that 64.41 to 64.43. So this level right here. We get back through this and this, aiming for the premium level. If we're just keying off of this breaker here, roll over it. You want to see it eat through here. That's it. Good. Now I want to see it close below there. It's the psychic candle, so just watch it. These are the 3 downside objectives. Got 8 seconds. You want to see it hold it here and then come back and give this a little tap. Right there. I'm going to stop loss it up here. If this is choppy and it comes all the way back through, I don't even want to see it get back through here. So just come back into that as the high. Keep coming lower. And I'm looking for these. Rejection block, pay yourself. Mm. See this one where it came back up, tapped that level, and then started going lower. Rejection block. This whole retesting thing, you don't want to see. I want to see a portion of that stay open for it to roll over and keep coming lower. So my line in the sand is there. Mean threshold, you've tapped it. Now if you tap it again, I'm out. You've already revisited this, so not panning out the way I want. Rejection block. Pay yourself at rejection blocks. So mean threshold still holding. Just came back one more time, tap me out. See if this rolls over here now and comes lower. Nope. We're revisiting this. Now if we get back above here, use this as support to go higher. Looking for that guy there now. There's your first presentation. Find support here. Looking for support off this candle. and a push higher into this premium here. It's just about to begin. How's our chart over here doing? Still sloppy, hey? We're in that now. Bissia current just above you. $64.32. A nice little tap here would be nice to see that leave from here. This is choppy, man. This is slow. They're 10 minutes or so. I'll be calling that quits because it's just sideways right now. There's no real. Finally, we got our little push up higher for Bitcoin. We're digging into those two levels we talked about. That's nice. Right off the mean threshold of that candle, we traded through it, came back to it, went higher. Now we're digging into these two levels and looking for this breaker up here. So there's one call good today. Back inside the breaker. The lows, this little low's been run out. Gold is a little choppy right now as well, so 15-minute. Looking for the rest of this to fill. Looking for gold to reach into here. It's probably going to reach into there. DAX went through our level. We got DAX as well. I don't know if Ali or Hans, if you've been trading that or not, but you've had some nice clean entries off of these levels in DAX. I like them. So they're reaching higher. What are we reaching for you guys? So equal highs above you. That's the next objective. You want to see this close above here and then come back and use the high, half the wick, the open, or sorry, the close. And then the main threshold will be your line in the sand on this one for this to keep going higher and reaching up into that upper range there. See you later, Craig. So your DAX, I want to see this level right here hold. Put a line right there. I want to see a piece of this stay open. If it doesn't, then look for this as your next level. You don't want to see it break through here on the downside. Right there would be the nice place to tap and go. Remember, you can wick all the way into here. You've got another, how many more minutes? 4 more minutes. We give a quick punch down into here, tap this high. I'll be okay with that too. But that's ideally where I want to see it stop, right there. I see Euro go higher now. Let's see Euro get up into here. Got a short index this morning, short up, and this is first one is equal lows. You got a short index. Oh, here you mean? It's a nice little areas for longs. So watch the next 2 minutes to see if we just tap off of this and close. But if we close below that level, then I'm looking for an attack on this bearish candle. Yeah. You'd have to have the patience to hold that and trust those levels. the levels we were calling there, you'd have to trust them. Have your stop loss sitting right there or one tick below that low. And once you break that high, move to break even, pay yourself, and then let the rest run. Running for your one objective, two objectives, this breaker here, and there's a premium box right up here. So if I was looking for a upside objective, I'd be looking right there. It's okay. It's okay. You didn't take the long on it. Nothing wrong with that, man. It's the go, no go line. There we go. There's our gold objective hit. That has to hold. That's holding right there. Nice, nice, nice. Kept running higher. Took out our premium level. Finally took out the highs. So that was your line in the sand right there. And all we did was just come back and find support off the close. Finally run through. So carry on, son. Keep going higher. Are things starting to clean up a bit now? Ah, I see how we're through that mean threshold on a close. Now you're looking for an attack on this candle. It's high, it's wick. It's got encroachment. And then I'm looking for this open here at 686. And now that you've taken out that high, and we're looking at this here, if we close below that, then we wait for a market structure shift and see if this candle gets attacked on the downside. If it doesn't, and we trade back through it and use it as support, then you want to go higher. So now this is where you have to have the patience to wait the next 45 minutes for the next 2 to 3 candles to see how we act off of this level here, that level there, trade below it, into it, then see if it gives us support to attack the mean threshold of that candle. So we mentioned that if you traded below this level, we'd be attacking this candle. We traded below that level, and now we're attacking the candle. 1, 2 objectives. Now looking for see if we attack this mean threshold here. Keep in mind, NASDAQ is still overall bearish. Bearish. Finally worked its way through here multiple times, and we're heavy. Traded through that level on a close. Now you want to see this whole wick, 50% of the wick give way, and it is. I want to see that low get taken and see if we can use half this wick to keep pushing lower. Because overall, you look at your 4-hour chart, 1-hour chart, 15, 5, and now your 1 minute. They're all kind of in sync, albeit crappy price action. They're still in sync to go lower. So I think that's going to be it for me, you guys. I don't see anything more fun playing in here. Look for this level here. Again, in your Dow Jones ES. I like this support off that level. That's good. I don't mind that. Keep coming lower. Looking for a run on the liquidity below the market, and I'm aiming for down here now. And a delicious little entry there for a long in crude oil. If that's an old high. If that high holds in place, so in other words, we see this get broken, traded back into, look for a run back down in here. 50% will put you here. %62% almost puts you right back into that old high there. So watch how that acts off of here. And a higher time frame hasn't quite filled that yet. Your mean threshold of your last up close candle is sitting at 64.82 as well. So its mean threshold lines up with this. So we'll see if we get a small retest in here for the next price leg higher. Now, if you want to look at that and say, where's my, what's the level? I'm trying to reverse engineer this. 64.86. So watch for it to come all the way back down into the mean threshold of that candle to reach for that level. We've closed below it. Look for a test, a retest here, and then a run all the way down into here, and then a run back to there. There's the retest. Now I want to see it do this. This is a longer version of what I'm looking for. You have a lot of bouncing around inside there, but that's the reverse engineering. So I'm going to leave that there. See if we trade back through this level, then forget this whole thing for now. So screen capture that, watch that, and see if you get that. This, I just reverse engineered something I'd like to see. We'll see if that happens. If this is the 11 o'clock, I'll run back on this little range here, and then you see a change in direction. I'm looking for an upside objective of that. So that would be the level. So I'll post it on the channel there. If it continues to manifest itself and works out, then I'll post it on there and smirk to myself about engineering liquidity. We're engineering our own liquidity. So anyway, that's it for me. I think I'm going to be out of here. I'm usually here till 10, but my mind's really not in this morning. Thank you very much, everybody. Appreciate all your love, all your support. Thank you, thank you, thank you. I appreciate every one of you for turning up, tuning in this morning. I will see you guys tomorrow or on the Telegram channel if I see something kind of fun turning up here. It's still kind of choppy. Again, still bearish overall. Despite all this crap, I'm still bearish overall. with a downside objective of 749, 728, and then looking for 691. Thanks again for everybody. I appreciate that. Thanks, Abs, Ron, thank you for tuning in. All you guys, thank you. I do appreciate every one of you. Thank you. And as usual, much love to all of you guys and your families, your friends. Stay safe. Be kind to each other out there. Violence is not the issue, or violence is not the solution. So be kind to each other out there, and talk about your problems. Even if we have differences of opinion, it's important that we talk it through. Violence is not the way. So much appreciate your time, and I'll see you guys tomorrow.